Hello and welcome to the look ahead for Friday, the 30th of August, with me, Fiona Sincotta, Senior Market Analyst at City Index. So, overnight, we'll be watching out for data from Japan, the Tokyo inflation print. Also got Australian retail sales coming in the European session, Eurozone inflation, and German retail sales will be in focus. And moving towards the US session, we've got Canadian GDP and those highly anticipated US core PCE figures. So we'll just start talking a little bit about Euro US dollar and Eurozone inflation. Now, Eurozone inflation is expected to cool to 2.2% year on year, down from 2.6%. Also, we've got German retail sales. German retail sales are expected to rise 0.1% after a sharp decline in the previous month. Now, data comes after we had German inflation data today, were actually cooled by more than expected, dropping below the ECB's target 2% level to 1.9%. Now, we've also seen data from the German economy across the week, such as GDP, consumer confidence, and IFO business sentiment, and they've all been pointing to a weaker outlook for the Eurozone's largest economy. Then also we've got tomorrow, we have the US core PCE, the Federal Reserve's preferred measure for inflation. And that is expected to rise to 2.7%, up from 2.6%. We're looking on a monthly basis, an increase of 0.2%. Today, that data obviously comes after today's GDP data, which saw the US economy see an upward revision to Q2 growth to 3.0%, up from 2.8%. So that's just helped to really calm those recession fears that were kicked off at the start of the month following that weaker than expected non-farm payroll report. Now, here we go. This is the Euro US dollar a chart that we're looking at now. We can see we've seen that run up as it bounced off the 200 SMA, broke out of several trading patterns, the rising trending ascending channel, and also the symmetrical triangle broke out, and it broke out up to this high here of 112. Now, since then, we've actually seen a relatively steep run lower. And that's as we've seen that US dollar pick up off of the 13-month low. Obviously, we've seen an extension of the gain in the US dollar after today's GDP data, which basically has just seen the market rein in expectations for an outsized rate cut by the Federal Reserve in September. Obviously, let's not forget the Fed was looking, or the market was expecting the Fed to be cutting around 100 basis points worth of cutting around 100 basis points worth of cuts this year, which is a lot of cuts in a short space of time. So actually, I think that stronger data that we've had, we're seeing a repricing of that, which is pulling the US dollar, boosting the US dollar, pulling Euro US dollar lower. Obviously, we've also had that weaker inflation data, which is adding into the mix. We've seen the euro weaken from a monthly low against the pound as well. What to be watching here? Well, we've taken out the level here, haven't we, of the 111.30 testing, broken through the 111 as well. We do have, I think, a level. The next level to be watching out for is going to be the 110. We're still some way from that at the moment. So, if we do get a miss in Eurozone inflation tomorrow, it comes in weaker than expected, and we do see stronger than expected US inflation data, then potentially we could see the Euro US dollar come down back towards this line here, down at the 110 level. On the upside, if we get stronger than expected Eurozone inflation and a weaker than expected, or cooler than expected US inflation, then the one on the upside to be watching for is the 111.40, which is the December 23 high. If we get a rise above that, then it'll be the 112 to be watching for. I do think for the time being that potentially we might have the high in as far as the Euro US dollar is concerned, now with the ECB also expected to cut rates in September. So let's see what the data says. Other things we're watching now, let's just have a look at what the DAX is doing as far as this data is concerned. We can see here DAX, oh gosh, up there, all-time high, fresh all-time high for the DAX. DAX has risen to a fresh all-time high. after the data today basically supported the view that the ECB is going to probably be cutting rates again in September. They've been they cut rates by 25 basis points in the June meeting, but they've been a little bit cautious about boxing themselves into a corner as far as the timing of the next rate cut is concerned. But I think given that deteriorating outlook that we've seen, given the fact that inflation is now below target level, I think there is a potential for the September rate cut, which is obviously boosting Germany, the DAX, also getting some support from the rally in US stocks as well. As far as the next level, I mean, 20,000 would be the next logical level to be looking for on the upside, but that's still obviously quite some way away. Another one to be watching out for, USD Japanese yen. We speak quite a lot about USD Japanese yen, but it is very much in the mood for moves at the moment. We will be watching out that inflation data from Tokyo. Obviously, it is Tokyo, it's not Japanese inflation, but it does tend to be representative of what we expect then from the Japanese inflation print later in next month. But so if we do start to see if we do see stronger than expected inflation, I think it came in last month at 2.2% core inflation. So if we see that rise, then that may obviously increase expectations of a Bank of Japan rate hike. It would certainly give the central bank more room to hike rates should they wish to do so. Just as far as the technical picture, and then obviously we've got US inflation data as well, which is going to be potentially a driver here if we come in lower or higher than expectations. As far as this technical picture, we saw a rebound lower from that one at 49.40 level. It's really just hovering around the 145 level. I think this week it's been pretty unmoved around that 145 level, consolidating after some fairly big moves. As far as levels to watch on the downside, obviously the target on the downside is that 141.90 level. On the upside, first is 146.50. That's the 23.6 fib level of the swing high up here, the 161, almost 162, and the swing low. And then above that, you've got this key level here, which is the 149.40. So we've done the Eurozone, we've done USD, Japanese yen. Let's just take a look at what's going on with USD CAD, because we've got that GDP data. GDP is expected to show that growth of 0.1% month on month. Look, well, I'm just going to give my chart a bit of a jiggle here. So basically what's been going on here, we've seen a really, big move in the loonie as well. We've seen, from this high here, or actually it went to a high here, didn't it, of the almost 140, 139.40. That was the 2024 high. And it's fallen very sharply. We've taken out this rising trend line support. We've taken out the 200 SMA. We've fallen now to a low here of 134.42, and we're just sort of testing this level here. This is the 134.70 level. It's just a level that's caught support or resistance on a couple of occasions, on numerous occasions, including the April low. So it's just trying to make its way back above there, and that's as the US dollar strengthens. Let's have a look here. We've got it in oversold territory. So we're going to probably see a recovery in the US dollar CAD to at least bring that out of oversold territory. Again, we've had the loonie has been supported by rising oil prices. We had a strong rise in oil prices at the start of the week on the back of concerns over Libya. And oil production being halted there because of a clash between fractions of the government and the central bank over oil revenues. Also concerns over a broadening of the war in the Middle East, which is also just supply. But we've seen oil prices actually just fall a little bit in recent days. And that's as we've seen inventory data was a bit disappointing to yesterday from the EIA. But so, you know, levels to be watching. As I said, if we get some upbeat data from Canada, that could help support the loonie. I mean, the Bank of Canada is expected to cut interest rates again. So I do think it may be doubtful that we see sort of a strong rebound in GDP data tomorrow. But if we did, then it could see some of those rate cut expectations reined in, which would lift the loonie. And we could see the pair fall lower, especially if we get cooler than expected US inflation data. 135, what's this level here? It's the February low. It's around the 133. 60, 70 level. On the upside, if we get some weakness in the loonie, the next one we'll be watching on the upsides will be that 136, which is the 200 SMA. Excellent. So I hope you like what you've seen. And if you do, then please do give me a like, or the video at least. And if you would like to see more videos like this, then please do subscribe.